Everyone wants to live an inspired life, yet so many people search for happiness following the footsteps of peers and taking advice from people who have different values and outcomes to which they're searching. There are people born into wealth, graduated from the best universities in the world, and there are people who have none of that and yet are living extraordinary lives full of fulfillment and reward. The purpose of this podcast is to share insights and strategies that allow you to question the status quo and think freely, so you can design your life and be who you want to be. We get one life. Time is our most valuable asset. I believe that when we're free and able to focus on meaningful work, we become better human beings. This is Always Free, and I'm your host, Jason Graystone.
Welcome to the leading podcast for financial empowerment and wealth creation. Subscribe to this podcast so you don't miss an episode. You can connect with Jason on social media and subscribe to the Jason Graystone YouTube channel for weekly videos. Don't forget to also subscribe to the weekly newsletter to receive frequent educational content and action steps to help you design your life so you can be who you want to be. For news on all future events and updates, go to jasongraystone.com.
Well, welcome back to the podcast, guys. I hope you're having a nice week so far. If this is the first time you're listening, welcome. This is the number one podcast for financial empowerment and wealth creation, true wealth creation. And if you've never heard of this podcast before, I highly recommend you stop now and go back to episode 1. You're going to find it on Spotify, SoundCloud, Stitcher, Podbean, all of those platforms. Apple Podcast has remove the first 10 or 12 episodes because they kind of get rid of old episodes, which I find absolutely bizarre, but that's how they work. And if you go back and listen to episode 1, that's how you're going to get the most out of this podcast. So go and find it. There's also a YouTube channel called the Always Free Podcast, or you can go to alwaysfreepodcast.com and start listening right there. And anyway, this week, I just wanted to ramble on, really. I want to talk a little bit about people's approach to trying to make their money work better for them, what to invest in, what not to invest in, but also returns and people's expectations. So I want to talk a little bit about that. And first of all, before I get into that, I want to just talk about I was having a conversation with someone the other day, and they were trying this investment strategy, and they were investing their money into some kind of asset class, or they were doing something, and they said to me, I've really let myself down. And the conversation kind of led on from them kind of not getting a result from something that they thought they would get, okay? And this is a person who wasn't working with me or anything at the time, and they've just actually joined the latest intake of our Tears of Freedom program, which is happening today till the 4th of July to celebrate Independence Day. But the conversation was like they'd let themselves down. And I just first of all want to say, the only way that you can let yourself down is if you had this fantasy about what your life should look like or what the results should look like, okay, in the first place. Because in order to fall down from something, you have to have lifted something up. And if you've got unrealistic expectations about what that looks like and the results of what that looks like, and you're beating yourself up because you're saying that you're telling yourself you should have that result, when really something isn't quite as meaningful to you as you might have realized, you're going to then have this feeling of being let down because you come back down from that fantasy that you've got of where you want to be. So the only way that you can be let down, the only way you can let yourself down is if you've got a fantasy over what it looked like in the first place, okay? Or you're trying to do something that isn't important to you, or you've got unrealistic expectations. That's the only way you can be let down, all right, in yourself. So the key is to get realistic expectations from day one, a strategy, the numbers, the projections, the figures, the components that you need and the numbers that you need, so that then you can work with, so that you know for certain where you're going to be in the future. And that's obviously what we do with our guys in the Tears of Freedom program. We give them tangible figures, so they know based on their own personal situation where they're going to be. And that's inspiring to them because they see those projections. They know by making certain tweaks to certain components that how that's going to affect their run to financial freedom. And that's why they're so driven. They get this intrinsic motivation to continue on that journey and achieve financial freedom. So I wanted to start there because the reason this guy was saying they've been let down or they've let themselves down is because of the results that they got from doing something. Okay. And when it comes to investing, a lot of people have this kind of very closed-minded, one or the other, no movement, very binary view on, well, if I don't get this return, then it's not working. And a lot of people think, well, you need to cover your lifestyle costs with trading, or you need to get this return on investing, or you need to buy a stock and get this return. Otherwise, you can't replace your income, and you can't live a life that you want to live because you have to go and get another job, or you have to have this job, or you have to have a certain amount of income here and a certain amount of income there, and it's not reliable. And that's rubbish. It's absolutely rubbish. The key is to be open-minded and adaptive to having this complete and comprehensive wealth liquidity system, which I always talk about, which is basically what the Tiers of Freedom program is. And thinking about your overall liquidity and your overall returns once you've built this system. Because if you're still thinking, I need to get this amount from trading, or I need to get this amount from investing, instead of thinking, well, what is it that I need to cover my lifestyle costs? And then how can I build this system so that based on the different returns, maybe I buy an index fund, maybe I buy a real estate investment trust, maybe I invest in a large cap stock, maybe I have some investments in a medium cap stock, maybe I have some investments in art and property and fine wine, or maybe I do some forex trading. Instead of looking at one thing, look at it all, look at the returns that you can yield on each one, and then you want a number to pop out the bottom of that on average every month. And that is the figure that you should be looking at and paying attention to, regardless of what's going on in that whole liquidity system, in that wealth portfolio. And you want to just make sure that you're covering that cost regardless of what's going on in there, because you know the different returns on different asset classes on average over time. And as long as you've got that buffer there, and you know the minimum, the worst case scenario, you can take that worst case scenario outcome or income from that portfolio, and you go, right, that's what I've got. So now how do I tweak it? And what that allows you to do is be much more flexible and adaptive. So let me give you an example of what I'm talking about here. There's been times where I've lived purely on trading income. Okay. There's been times where the opportunity shifts in the market. So for instance, back in 2020, April 3rd, 2020, I had my biggest trading day. I was all in on trading for the rest of that summer. And that's because I had my biggest trading day. I had did about 133,000 in 18 hours, which was my biggest trading session. And because I had that big boost in my trading account, I then, because of everything that was going on at the market, it was kind of business dynamics were changing. I shifted my focus to just trading because I wasn't leaving my house. There was no other opportunities I was looking at. So I shifted more capital into my trading allocation. And then based on those returns, I know that what I need to make per month on average and what I need to take as an income. And most of my income, majority of my income was coming from my trading account. However, now there's other opportunities. So now during that summer, because I had so much free time, I built a business, and I was building a business. So I needed more time. So I needed to get away from the charts a little bit. I put more of the money into passive investments, and I bought a couple of stocks. And by looking at the entire thing, I know exactly how much money to move based on the returns that I get in each section of the tiers, and then what I need to pump out at end of each month for an income for me to cover my lifestyle costs. And it wasn't about just looking at trading. It wasn't about just looking at stocks. It wasn't about looking at passive investing. It's just looking at the whole thing and going, I need this much per month. What do I need to move to where based on my objective, my agenda, my lifestyle at the moment, what I'm trying to get out of it, the opportunities in the market right now, where can I shift my energy? Where can I shift my focus and still produce that same income? Does that make sense? So for instance, we grew the business. The business income starts to grow. We put that straight into the investment portfolio, straight into all of the tiers across my passive investments, my real estate investment trust, my ETFs, my stocks, my large cap stocks, medium cap stocks, my angel investments, we're now into property in Portugal. Okay, so then there's another shift. Well, okay, I want to put an investment into a property deal. I'm going to need to sacrifice how much liquidity? Okay, what effect does that have on my total overall tiers? Okay, what effect does that have by shifting that capital? Where can I take that capital from and still maintain the same return? So really, what I'm trying to get across is, don't be so closed-minded and don't be so kind of beating yourself up that you're not just getting a return from one thing. If you're getting a passive income, it doesn't matter where it's coming from, as long as you've got the figures to be able to maintain that passive income and understand how by tweaking certain things you can still maintain that passive income but have more opportunity, more diversification and less risk. And you can also take advantage of more opportunities that come your way. So now I know, for instance, towards the end of this year, my focus will shift more towards my trading income again. Whereas throughout the last 12 months, it's been more kind of dividend yields and investments. Whereas in the next 12 months, I'm going to have a focus on this property development in Portugal. We're building 22 luxury 3-bedroom villas in Luz, looking over a big valley, looking down towards the sea. We're building 28 apartments, 14 townhouses, and that's a big development. So my focus will shift to that, which means I'll be doing a bit less trading. I'll be doing more swing trading, and I'll be doing some more passive investments. So I won't be looking at too many stocks unless there's obviously a great opportunity. But all I'm looking at is covering my lifestyle costs from a passive income. That's it. I don't care about, making a certain amount on a certain thing. I just know that what my average performance is, let's just say you're getting 10% on index funds and you're getting, 7% on REITs, and you're getting, 15-20% on stocks, dividends, and you're getting 25 plus on trading, then at least on average what you're likely to bring in. You divide that up, half the profit, divide it up between 12 months, what you can take. And you also take into consideration what the maximum drawdown might be on any one of those assets, so that you can factor in, well, if this one drops to zero, how is that going to affect my overall liquidity? How is that going to affect my overall performance? And then how will that affect my regular passive income? So a lot of people don't know how to do this stuff, and a lot of people really don't even believe that passive income exists. I'm here to tell you that it absolutely does. That's how I earn the most of my money. Okay. And right now, if I stop working today, I could cover my current lifestyle with pure passive income. And that is the goal. That's the goal, so that you can choose how you spend your time. You can choose if you decide to, build a business or do another opportunity or work somewhere. You're always going to want to work. You will always want to work if you're doing what you love. There's no doubt about it. But the big mistake that I see people making is they try and invest in too many things. So then they go, well, okay, well, I'm going to kind of split and diversify between 10, 15 different things. And then, of course, if one does really, really well, then you really only see a marginal gain in your equity curve, in your net worth, in your liquidity. So it's about understanding certain things, understanding certain strategies, because, by the way, investing in an index fund has a different strategy. Passive investing has a different strategy than investing in a stock. And the greatest way to, the easiest way to explain that is, just because you might have an index fund that holds Google and Microsoft and Johnson & Johnson and Amazon and Facebook, it doesn't mean that you can just go and buy those individual stocks as well, because it might not be the right time. They might be overvalued, and then you have to have a strategy to understand how to identify when they're undervalued so that you get the best price and you get the most growth. So there's that as well. But the problem is people try and diversify too much, and then one does really well and they don't see the benefits because it's just a tiny little small portion of it's a tiny marginal gain. So you have to understand that as well. But really what I'm getting at is you have to understand how to build this system and then have the numbers so that you can focus on what it is you need, and then by making certain tweaks in certain things, how you'll get to that number. And once you get to that number, that's it. That's what you need. And then the returns after that, it doesn't matter because you can understand how to shift liquidity into different sections of that overall investment portfolio and still maintain the same income. So you're not out there worried about your next move, and you're calm and poised. So if that is something that you're interested in, guys, today we are starting our intake to celebrate Independence Day. Tears of Freedom intake. It's going to go live, from the 30th, so yesterday. We've got about 5 spaces left. Okay, if you want to get in with a chance to be offered that opportunity to work with me for the next 12 months, definitely go over to tearsoffreedom.com/mastermind. You have to join the Facebook group and then shoot us a DM once you're in that group, and we'll send you the link and you'll get all the info you need to join. But going back to what I said at the beginning, guys, don't let yourself down. Have realistic expectations in the first place so that you don't have this feeling of, oh God, it's not quite what I expected. I don't know what I'm going to do. This isn't going well. Yeah, because the chances are you probably didn't really understand what it was about in the first place. So this podcast is here to empower you, open your eyes, make you think bigger, make you see the bigger picture, hopefully give you some insights into direction and clarity over your next moves so that you don't end up as kind of one of these statistical people who lose their money and then go round and round in circles. So that's it for today, guys. Have a great rest of your day and weekend, and I'll see you then.
Subscribe to this podcast so you don't miss an episode. For news on all future events and updates, go to jasongraystone.com.